So it's a huge day for the markets. The S&P, in fact, on pace for a record close, and we're officially halfway through earnings season. And guess what, folks? We are enjoying life. People are buying stuff that they don't need, but that they want. And, you know, the only kind of purchase you see is when people have the cash and the confidence to pull this off. I want you to just check out some of the huge winners from earnings season. Recreational vehicles, snowmobiles, motorcycles, electric sports cars. These stocks have made gigantic moves in the last couple of weeks. By the way, people also sprucing up the inside of their homes rather than the kind of projects that we've seen more recently in recent years where people were sort of making their house easier to sell. We're buying furniture stocks. Check that out. They have made some monster moves, including Mohawk, the carpet maker, which is leading the way today. Now, if you're worried that this sounds like 2007, it does, with one caveat. This time we are buying stuff without refinancing our house 3 or 4 times or overloading the credit card. To help us dig further into this, I want to bring in Kingsview Asset Management CIO Scott Martin and SureVest President Rob Luna. You know, I'm loving the action here, Scott. I can't help it, but what I love is forget about how many companies missed or beat. I'm looking at companies react. Mohawk through the roof, Winnebago through the roof, Polaris through the roof. These stocks don't move unless people have big-time discretionary money.
Yeah, I agree, Charles, and I think the market, to some degree, got off sides on a couple of those names, as you mentioned. Harley-Davidson's another great one that had some really good kind of under-the-radar indicators, as you noted in your kind of lead in there about really how good the consumer is doing to where they're buying all that stuff, like you said, that they don't need. I mean, I'll tell you another one that's an indicator to me is sports equipment. I'm out golfing with some guys playing tennis, and guys are maybe not hitting their driver as well as they'd like to, and they go and buy a new driver. They buy a new set of clubs, a new tennis racket. I mean, things that are out there that are just right at the fingertips, obviously, nowadays. Amazon, another stock, Charles, that we obviously own that we've been picking up a little bit on today. Not so great earnings numbers, good revenue numbers, gets on the lows and then gets a nice pop. So, yeah, the market's really treating these guys really well. By the way,
they had another official read on consumer sentiment today. Confidence, the last iteration of this came from the University of Michigan. And the important thing here to highlight, though, is the foundation of our confidence, right? We anticipate higher wages and lower inflation. We're talking 2.3%. That is an all-time record. By the way, higher incomes are expected by nearly 2/3 of all households. So when you combine both of these, we are at a record, all-time record, Rob, with respect to people looking for low inflation, higher incomes. That's a pretty good combination.
Yeah, I agree, Charles. Another great indicator is Scott there. Scott's starting to sound like a bull over there. So I think we got everybody buying into this market right now.
That's the time to sell, though, right?
You're talking about these.
Hold on one second, guys, while I call my broker.
Buy. Yeah, and then the thing is, you look at Polaris, for example. You're talking about this last week, up 38% year to date. Winnebago up 108% year to date, and they're doing this in the face of 25% aluminum and steel tariffs, Charles. So if we're able to get a deal, roll back some of those tariffs, I think sky's the limit with some of these names. But, look, they're still way off where they were in 2008, so I think there's a lot of opportunity going forward. But things look good in our opinion.
Now, of course, we started with some of the positives. Scott, you brought up Amazon. Listen, it's tough to understand it. They did miss on the bottom line, beat on the top line. They're spending a lot of money, a whole lot of money to build out. It's ironic in many ways because before everyone in retail had to catch up to them, it feels like now, Scott, they're trying to catch up to the Walmarts of the world. So does that obviously you're saying you're buying more. It doesn't change your mind about the stock.
No, and I think that was a huge gift this morning, seeing the stock down 6%, 7 or so as it was early on. I mean, I think that's really the gift you should be giving for Christmas. Don't buy stuff off of Amazon, but give somebody maybe Amazon stock, because I think at these levels it's very attractive. I think you're right, though, too, Charles. They're playing a little bit of a different game here. They've talked about the one-day shipping that's costing them. Obviously, the Amazon Web Services, we saw from some of the Microsoft numbers this week. Microsoft's catching up there, or leading, in fact. And then certainly, even the advertising stuff that Amazon is doing is very good, but they have some competitors there, too. So we love the stock. I think Amazon and some of these other ones that pull back. I'll tell you, even a crazy idea. I mean, Rob mentioned it. Want to talk about bullish. I think Twitter's pullback is actually an interesting indicator to where maybe you could jump in there, too, on something that pulls back as big as Twitter did, just because when these stocks have pulled back 20+%, that's been the time to buy, and they rise again.
Real quick, Rob, I want to ask you about the potential for making a new high in the S&P today and what it means. Does it create a greater sense of urgency for those folks who have been on the sidelines?
Yeah, no, I think it means a lot, Charles. You know, our year-end target since the beginning of the year is 3,100. We're about 3% away from there. A China deal is definitely going to be able to get us there. But we know seasonality. This is a great time to be buying stocks. So I think any positive momentum is going to get some of this money off the sidelines. And we could absolutely wind up pushing above that if we can get a deal done here.
All right, Scott and Rob, stand by for a minute because President Trump was talking about China trade before making his way to South Carolina. This coming after the U.S. and China trade teams held a call today. The Chinese asking to roll back these tariffs that are supposed to go into effect in December. I want to go to Edward Lawrence. He's live in Washington with more. Edward.
Yeah, Charles, some very positive news coming out of this phone conversation. The two sides, the two heads of the trade teams spoke, and coming out of the U.S. Trade Representative's office then, after that phone conversation, saying that they are close to finalizing the language in this Phase 1 deal on a number of sections. Now, the Chinese trade sources tell us that they were planning on asking the U.S. trade delegation here to either roll back or repeal the tariffs on December 15th. That's $15 billion, or 15% on $300 billion. The rest of the $300 billion, the stuff that we buy for Christmas. Now, Chinese asked for that. Something President Donald Trump seemed to confirm when leaving the White House today. Listen.
We're doing very well with China. We're very good with the farmers. The farmers are going to do better maybe than anybody, but everybody's doing well. China wants to make a deal. They'd like to see some reductions in tariffs. They'd like to see some tariffs that are scheduled to go on very soon. They'd like to see them not go on. But China, they really, look, you know it, they really want to make a deal. They're going to be buying much more farm product than anybody ever thought possible.
And U.S. Trade Representative Robert Lighthizer saying that there'll be continuous conversations at the deputy level to try and get this done, and then a future phone call in the near future between the two heads of the trade delegations. It's clear from the progress during these trade talks that the vice president's speech yesterday did not have an impact on that trade progress that's come out today. Now, the vice president's chief of staff says, though, we can still have progress with direct conversation with the Chinese. Listen. Well, and today, the U.S. Trade Representative, Mark Short, did come out and say that the Chinese we have to have that real conversation with the Chinese on those other sectors, human rights abuses and some other things, and as well as, in a separate issue, go forward with the trade where we can work together with them. Now, today, the U.S. Trade Representative's office releasing another list of tariff exemptions. This is another big list of exemptions that has some big items on it. Now, companies can then get the tariffs back that they have already paid for back from September of 2018 on this. So, again, a big win, some goodwill going on, and it looks like a lot of progress on trade. Charles?
Edward, thank you very much. So let's talk about this trade situation. Obviously, the market's been hoping that this would happen, but it's going to come in stages. So let's go with the first stage. I want to bring our markets guest back. Rob, I'll start with you. December 15th number. It looks like low-hanging fruit for both sides. President Trump he's got some motivation not to want to put tariffs on toys and things like that as well. So if that does happen, China buys more things. In other words, if we just kind of keep going in the direction that we're going in now, what does it mean for this market?
Yeah, I think it's all positive. I mean, you know what was interesting? They were just mentioning some of this recapture on some of the tariffs that were paid back in 2018. So that could be forward earnings momentum for companies like Polaris and Winnebago. But I think that means a lot. Nobody wants to kill Christmas, Charles. And I think if we're able to get some deal done, I think this will be a stage deal. I don't think everything gets done in December. But if we see some positive momentum, I think that's definitely going to carry us into the new year. And I think that's good if you're a long-term investor here.
Scott, I was really happy that there was so much skepticism about Phase 1. I love that Wall Street's been skeptical about this because it makes the bar lower and lower. But now I'm hearing a whole lot of experts saying, oh, Phase 1 was easy. It's no big deal. So now handicap what we need for Phase 2.
Yeah, well, I'll tell you, nothing's easy, number one. So as far as, this deal goes, Phase 1 is an accomplishment. I, though, am one of those guys, Charles, that has been kind of negative on it. I really didn't think that we were going to get this far this fast after the meeting from a couple weeks ago. But so far it looks okay. Now, I think you're right, though. As you talked about with Edward, I think we need some really concrete plans here going forward. I think Phase 2 is enforcement, with respect to some of the technology transfer, which is obviously a big deal, currency manipulation, and there has to be some enforceable rules now where they can't get away with stuff. We've told them not to do that stuff for a while, and they've still done it. We haven't done anything. So there's got to be some enforceable points to phase 2, maybe that will change the flavor of this deal a little bit and maybe make the markets even more confident, to Rob's point, about why this may work out a little bit better for all the companies involved versus this tit for tat, which we've been going through in the last 18 months. When
the news broke about this and if, making it feel like, okay, we are moving further along, the stage is perfectly set up for the Presidents Trump and Xi to have a really good meeting down in South America and maybe, sign something or move it even further. A lot of names that have been down this earnings season made pretty good moves. I mean, IBM's making a good move today, 3M, Caterpillar. Scott, you talked earlier about buying some of these stocks that have gotten hammered. Is that the move now to look at some of these names that are down during these earnings periods? Not the ones that went up, but the ones that have indeed gone down, and these are the names that are certainly associated with trade.
Yes, because the outlook is relatively good. And like I said, like in the case of Twitter, you mentioned Cat. Charles, another one we talked about on your show together is Deere, DE. That's been a great one. Because those names, they get overdone to the downside. I mean, Twitter's not worth 20% less this week than it was last week. Now, yeah, it was maybe a little extended, too, before that. But still, you see these pullbacks, and you see these areas come down. Intel's another one. I mean, so those are areas, to me, if I'm putting new cash to work, as we are for some of our clients even today, as I mentioned with Amazon, that stuff that's reacted maybe a little bit overly so to the downside is places I would put my money and not so much chase some of the stuff that's popping.
Rob, your thoughts on that? Some of these stocks that have gotten hit, some of these big-name stocks that have gotten hit this earnings season.
Yeah, no, I completely agree with Scott on that. 3M's a name that we've owned for a while. We're adding to our position here. It's a stock that's had some struggles, but you look, the stock's up 3% today. It's totally lagged. You don't want to be chasing the utility stocks here, the real estate investment trust, and, the Procter & Gamble's of the world that are up 50% over the last year. Going forward, that's not going to get it done. Look at some of these names that have lagged. Much better strategy right here for investors.
Scott, Rob, you're the best. Thank you both very much. Appreciate it, guys.